Today I'm going to take you through a really simple, easy, step-by-step approach that anyone can grasp straight away, regardless of your trading experience, of how to identify and find successful, profitable Forex trades. The best place to begin is to train your mind to be able to see those bad/losing trades. Because if we think about this logically, and we just look at the market as a whole, and we say to ourselves, well, we can actually identify those bad trades, put them to one side. What are we left with? Of course, we're left with the good trades. Sounds simple, right? That's because it is. I don't need to go through some technical analysis on the charts to show you an example of what a bad trade and what a good trade looks like. Because the process that I'm going to show you now is a process to do with your mindset. It's a process of elimination and questions that you should be asking yourself, basic questions you should be asking yourself before you take the trade. A simple filter you can put in place is to ask yourself a question. You need to be honest with yourself. You need to remove all emotions and, of course, remove the FOMO, the fear of missing out. And that question is, does this trade meet my criteria? Because if you use strategies like we do inside the Golden Suite, where we literally have a tick box exercise, are confluences A, B, C, D, and E met? If they are not, we do not enter that trade. That trade will not be executed. And that's the great thing about having a step-by-step checklist strategy. It leaves minimal guesswork and you have your answer there, yes or no. If there's boxes that are crossed, you're not going to take that trade. So before you take the trade, ask yourself this very simple question: does this trade fully meet criteria? Every trading strategy has rules. If you're keeping those rules in your mind, sometimes those rules can be overrode by your emotions. Therefore, if you feel like you're being a victim of that and you're taking bad trades because of your emotions, print your checklist out, physically type it up, print it out, and then you can literally tick box or put a cross in a box every time a confluence is met or isn't met. And if you've got some crosses in those boxes, you know not to enter that trade. Before placing a trade, if you hesitate and you think to yourself, I'm not too sure, maybe I shouldn't take this, maybe I should wait for an exit push into this level, for example, because you've already questioned yourself about this trade, you should not take that trade. The reason why is, first of all, you're lacking confidence in this position. You're more likely going to take this trade because you've got fear of missing out. Second of all, once you take this trade, you're now going to be watching this trade because you wasn't confident in the setup in the first place. Therefore, this could lead to bad decision making and, of course, micromanagement of the trade. Lastly, how to spot a bad trade. Ask yourself this question: if this trade you're about to take hits stop loss, how are you going to feel? Are you going to say to yourself, yeah, do you know what? I knew I shouldn't have taken that trade. If that is the way you are going to feel, then you need to set up that trade. If you can honestly say to yourself, if this trade hits stop loss, I'm really not going to mind. Because yes, it 100% met my criteria. It's a good, valid setup. It's just one of those trades that didn't go my way. Because as much as we may not want to believe this or may not want to hear this, there will always be losses in Forex. And as soon as you accept that fact, your trading will become a lot more consistent. So now you have a very simple thought process that you can go through and a set of questions you can ask yourself to eliminate the bad losing trades. So now let's look at how we can find those good profitable trades. Obviously we can look at doing the opposite to what we've just said with the bad trades. For example, make sure your checklist is met, so on and so forth, which is fine. That's obvious. But there's a little bit more that we need to take into consideration. If you're not back testing as a trader, you need to be. Because when you back test, you know what your edge is over the market. You know what your most profitable trade setups are, because everybody looks at the market from a slightly different angle. Everyone's unique as a trader. But by back testing and getting experience in the market and trading the live markets, you're going to reveal what your edge is. Everybody has one, no matter who they are. Everyone has their own unique edge. And you need to find that edge. It's so important. Find that edge and capitalize on it and use that edge against the market. The next tip is one you've mostly heard multiple times, and this kind of comes into two brackets. First of all, more trades do not mean more profit. The more you're in the market, the more your capital's at risk, the more you end up chasing the market as well, which isn't good for psychology, and of course isn't good for your capital, because reserves will start to get low if you're chasing the market. Now in this same category, the same bracket, you need to focus on the percentage return and not the monetary value. Because whether you have a £1,000 account or £100,000 account, 10% return is still 10% return. You need to really take that into consideration, because I've seen so many people blow small accounts because they're trying to make a life-changing amount of money with only a small account balance, where realistically they focused on the percentages, they could have scaled up or even got a funded trading account. So make sure before you take your trade, you've got a good risk to reward ratio, you're not over leveraging, because first of all, this could be a good trade, but if you're over leveraging and it goes the wrong way, therefore you may have lost 5 or 10% instead of 1 or 2%. So make sure you're not chasing the money and you're not chasing the market and you're not over trading. Next, you need to get a strategy which is proven, that you've tested over time yourself as well. Because sticking to a strategy is where your confidence is going to grow massively. Because you know exactly what to do day in and day out. You know exactly what to look for, and more importantly, where to look for this specific setup within the market. Having a strategy that you can stick to is going to give you a lot more control, a lot more clarity, and a lot more organization throughout your trading career. It's very important that you don't keep changing your strategy because you may have had 1 or 2 or 3 losses, or because you've seen someone doing well on a certain strategy. In this market, we don't really know who's doing what, do we? You need to think about yourself, stay in your lane, get a good consistent strategy and stick with it, and you'll get those consistent results. Inside the Golden Suite, we actually use 4 different strategies. They work in accordance with one another. They basically create one big powerful strategy which help us scale into winning trades. We've stuck with those strategies for years. This isn't strategies that we're using or we're changing every week. We've literally stuck to these same strategies for years and years. Why? Because they work, and we stick to those because we want to be consistent. We know these strategies give us an edge over the market and help us find those winning trades. In the markets, there's a lot of noise, a lot of random behavior, and that's what we're trying to move away from. We're only trying to look at the information that we need to see. That's why, to eliminate the bad losing trades, you're going to ask yourself those set of questions before you take the trade, just to make sure 1, you're in the right mindset, and 2, the trade does meet your criteria. Then, when you're getting ready to take the trade, are you sticking to your 1 strategy or 2 strategies? Whatever your strategy system is, your proven strategy, are you sticking within those guidelines, or are you just kind of moving away slightly to the side? Because if you are, that's when you start incurring losses. Because it's very easy to start at point A with a strategy, keep slightly tweaking it because you want to take trades, then before you know it, months later, your strategy's completely changed because you started deviating bit by bit, time after time. And I'm sure some of you that are watching this now, you've actually experienced that. So get your edge over the market, ask yourself those set questions before you're going to take a trade, stick to your strategy, and you're going to be left with the good setups only. A good setup doesn't always mean a winning setup, because at the end of the day, this is trading. Anything can happen. But as long as you maintain a good risk to reward, stick to your consistent strategy, your edge will play out. And that's what we're trying to do. Get our edge to play out through time. We stay consistent, and trading can benefit us lifelong, not just week long or month long, and then we change our strategy again. It's essential to know exactly what sort of trader that you want to be. Do you want to be the trader who's on the charts all day, trying to find every single setup possible, trying to trade every movement in the markets, which, to be honest, is going to leave you with a very stressful day, and you're basically just going to go from one full-time job, which could be your 9 to 5 at the moment, straight into another one, trading, which, to be honest, we're not really trading for that. We're trading because we want a much better lifestyle. So you can be the second type of trader who does their analysis for 30 minutes, an hour a day, sets their alerts, then they can just go off and do whatever they want all day. Their alerts go off and trade criteria is met, they can just take the trade. Just whip open their laptop, job done. Because don't forget, trading doesn't only give us wealth, it gives us time as well. Thank you for tuning in and watching this YouTube video. I just wanted to share a few tips that I use myself personally, which has helped me stay consistent in the markets now for many years. If you'd like to see more videos like this, please subscribe because it really helps and it really prompts me to create more content and more videos for you guys. So please like, subscribe, and I'll see you on the next video.